Hello and welcome to Crux Investor. We caught up earlier today with Dan O'Flaherty, CEO of Maverix Metals, listed on TSX and NYSE. We talked to him about how 2020 went for him, plans for 2021, portfolio size, what's important to him, what should be important to investors. If you want our thoughts and opinions on the conversation, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. There are commentaries from experts from around the world on a variety of companies, commodities, including royalties, which you might find insightful. We've got training courses on there for help you with your diligence process. We've got summaries of other interviews that we've done just to save you some time, because we know you're busy. And if you want to join a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly and safe environment, free from abuse, trolling and judgment, go and join them at cruxinvestor.com/club. Hope you think that sounds nice, because it is. And we'd love your feedback too. So do give us a like, it'd be appreciated. Leave your thoughts below, we get back to everyone. And if you want to see precisely what we talked about with Dan today, do take a look in the description below. Dan, how are you doing, sir?
Very good. Yourself?
Not too bad. Long time since we spoke. How have you been keeping?
Very good. Thank you for having Maverix on today.
Well, it's okay. I think we caught up with Ryan back in August last year, so it's about time we caught up to see what you've been up to. Tell you what, why don't you kick off? Give us a 1-minute overview of the business, and I'll pick up with some questions from there.
The high-level company snapshot is that we're a precious metals royalty and streaming company. We currently have a market capitalization of approximately $700 million US, with a portfolio of over 115 precious metals royalties and streams. 13 of those are currently cash flowing at very strong cash flow margins.
Okay, fine. Well, if I look at your performance, obviously it's been a good couple of years for you guys, and up over a 700 million market cap. But do you feel the market has just flattened out a bit? We've seen what's happening in precious metals. Are you being affected by that?
It's interesting. So we have been a company for just under 5 years now, and it's been very busy building up the current portfolio that we have. We are starting to see, with the rise in gold price over the past 5 years, the last month notwithstanding, some new entrants come into the royalty sector. And I think that is driven by investor demand for the royalty and streaming model. So it has been interesting to see kind of the changes as we've kind of matured as a company ourselves.
Yeah, for sure. I mean, it was inevitable that this is going to happen since the market picked up 4 royalty companies. You're going to get new entrants and new competition. Is that affecting your ability to get good deals? It
is interesting. We're just seeing this now. So Maverix is still in a very unique size range in terms of a market cap. We're the only precious metal royalty and streaming company between a market cap of $500 million and $1 billion US market cap. So there's obviously the larger players that are very established, and a number of newer entrants to the market. And where I guess we differentiate ourselves is, we have a very strong cash flowing base that we've put together over the past 5 years. And I think that when you compare that with our financial capacity as well, we have $50 million in cash, $120 million credit facility fully undrawn. That gives us a significant strength relative to some of the newer entrants. And with respect to the more established players, where we are size range, we still have an ability to meaningfully grow percentage-wise, where transactions that are achievable will still move the needle and be important for Maverix. So we're still seeing, opportunities out there. They are, getting a little bit more competition, but we're well suited to participate in future transactions.
Okay, so I do want to talk about the company in a second, but I wouldn't want your view of the macro at the moment, because let's face it, with the amount of quantitative easing, the amount of debt out there, people's expectation at the end of last year, gold would take off and go to the moon. I think the phrase is the most overheard phrase I heard last year. That hasn't been the case. The market's performing in very unexpected ways, and I can listen to experts from both sides of that argument beautifully articulate why that is the case. But it seems to me no one knows what's going on at the moment.
It seems there's been a little bit of a disconnect between the gold price and the gold equities, with where some of the gold equities are trading relatively cheaply with the cash flow that they're generating at these still very high gold prices, despite the very recent pullback. We see that as a huge opportunity, because we very much believe in the long-term, macro for gold. And once that ultimately gets deployed into the equities, we think we can see some pretty significant moves kind of in the future here.
But what's happening in the market with I say gold prices come off, the equities are doing okay because at these prices people are still making money. But what happened to gold 2000, gold 3000?
Oh, well, we're still believers. You know, a little pullback isn't the most unhealthy thing, and building a longer base and continuing to move up, I think, is the longer term Mavericks view. You know, whether it's 3 months, 6 months, a year, you know, we'd have to check our crystal ball to see that. But it's you know, absolutely believe in the longer term macro of gold, and you see kind of these higher gold prices, and people are excited. Projects look better economically. But as you just mentioned, kind of the equity window isn't completely wide open. And that actually still leaves an opportunity for royalty and streaming companies to be part of the capital structure where projects look better economically, and there's still an opportunity to kind of deploy capital into the capital structure.
What do you think this whole kind of crypto environment, are people being distracted by Bitcoin, or are gold bugs, and never the twain shall meet?
It's certainly, we get asked about it quite a bit. So based on that, I would say that there probably is a little bit of distraction or cannibalization of kind of the gold focus just based on cryptocurrencies. You know, our belief is that gold has been, you know, a viable kind of currency for thousands of years, and with that kind of track record, still, you know, a very great store of value going forward.
Okay. Let's talk about the company here, because I think the macro, I think, is the great unknown at the moment. So again, I might sort of go back to the beginning, because like I said, it's been a while since we've spoken, to sort of remind people your experience in royalties. You know, so how many royalty transactions have you done?
Mm-hmm. Well, I can start with just how the company came together. It was about 5 years ago. Jeff Burns, who was our chairman, he was the CEO of Pan American Silver for 12 years. And after 12 years in that role, he decided to step down. And during the transition to the now CEO, Michael Steinmann, Jeff noticed that there was a number of royalties in the Pan American portfolio that they were receiving no value for. So he went to the chairman of Pan American Silver at the time, Ross Beaty, suggested taking these royalties and putting them into a separate vehicle and daylighting that vehicle to surface some value, you know, that wasn't being really realized in Pan American Silver. And Ross Beaty, being a serial entrepreneur, thought about that for about 2 seconds and said, "That's a great idea, Jeff." And Jeff, when you step down as CEO, you can steward the company as chairman. So Jeff has been in the mining operating industry for 4 decades approximately. He's got a very strong technical Rolodex, being able to have great relationships, being able to put together a very strong technical team. Spent 10 years in investment banking before joining the mining industry myself, so I'm more of the finance side of the equation. And while I was in the banking world, our focus was exclusively on mergers and acquisitions in the mining sector, with a focus on royalty in the streaming sector. So many of the initial transactions that Wheaton Precious, back when they were actually called Silver Wheaton, was on, we would have been involved in that. And Jeff reached out to me based on that background, and that's how the team got put together. So it's been highly complementary with the very strong technical side, which is absolutely needed, as well as the finance and M&A side as well. So that's been it's worked very well together. Okay,
so tell me more about the technical assessment side of things. So are you doing it all internally, or are you buying in consultants as well?
It's interesting. We have a unique advantage at Mavericks. We do have an internal technical team. Obviously Jeff as well. Our large shareholders, we have Newmont, Pan American Silver, and Kinross all on our registry. We actually have we actually have a representative from Newmont on our board, a representative from Pan American Silver on our board, and we share a director in common with Kinross. And there's very few assets in the Americas that one of those companies or someone at those companies hasn't looked at already. And we've actually been able to draw upon that experience and draw upon those relationships to the benefit of all Maverick shareholders, including themselves. So it's actually worked out very well. That's, I would say, unique to a Mavericks where we are at.
Right. So that's your competitive edge. Some people have databases. Yeah. Some people know people. Your partners are the competitive edge.
Yeah, well, one of them. I mean, we certainly have the databases and our own internal work, but it's certainly an added benefit.
Right. So remind me again of the overall portfolio size.
So it's 115 precious metals, royalties, and streams. 13 of those are currently paying. And just for quantum of revenue, our most recently financial results were Q3 2020, where we had $15 million US of revenue in that quarter at 90% cash margins, and 99% of that revenue comes from gold and silver. So very much a precious metals focus, high margin. We are expecting to announce our financial results for the full year 2020 in the coming weeks. So that will be news that will be coming out from Mavericks as well.
Right. And in terms of the development plays rather than the production plays, I think you covered that. In terms of the development plays, how many of those have got a 43-101 on them, or a resource or reserve?
We have, as the nature of the portfolios that we acquire, particularly from Newmont and Kinross, Goldfields and Pan American Silver, is they all had assets across the entire development spectrum, whether it's near-term development, which we have very near-term development, including a royalty on Orla's Camino Rojo, which should come on production this year, a royalty on Bluestone's Cerro Blanco project, which just announced an updated PEA, which they're expanded the size of the project, as well as mid-term assets, a number of assets such as Delamar, McCoy Cove in the United States. And across the Western United States, we've got development assets, as well as longer-term exploration, as well as some very long-dated optionality assets, such as a royalty on Cerro Casale. So it really is across the spectrum that we do have exposure.
Right, but I'm trying to get a sense of, like, in the next 2 years, what's the cash flow profile look like, or how does it improve?
Well, as I mentioned, Orla's Camino Rojo will be the next project that we have coming online. Another project that we have a royalty on, which was shut down approximately just under 2 years ago, is Coeur's Silvertip project in Canada. They're talking about they did some significant investment there, improving the resource base, and that we would expect to come back online. I think they're talking about that now. So those would be two that would be coming on in the next 18 months, I would expect.
Right, and that's because they're deploying capital for drilling programs and the rest. So,
absolutely.
So you've got confidence over that.
Absolutely, and that's across the portfolio. As we're really seeing at these gold prices and at the cash flow, a lot of the producers are making, or the investments in some of the developers, is they're spending significant amount of capital in their own assets for the benefit of their own shareholders. And that's one of the, I think, core model that really attracts investors to the royalty sector is, we get that benefit without any additional cost. So we're seeing significant investment in a number of those assets, and we can touch on a couple more of them, but it is across the portfolio that we're seeing. I would call it organic growth.
Okay, but how do you measure that? I mean, do you look at the number of meters being drilled each year on your assets? Because that has a knock-on effect for you in terms of how you get valued, right?
Yeah, no, we look at it as exactly that. How much dollars are being invested? How much focus it is as part of the company that is the underlying operator. But yes, those would be the metrics that we would focus on and monitor. Obviously, we have pretty good relationships with our underlying operating partners, so we're talking to them constantly, getting updates on what their plans are. As when we're talking to our investors, we want to be able to properly articulate what they're trying to do. So we do have a very open dialogue with our partners.
Are they all public companies, or do you have any private?
For the most part, they're public. We do have a silver stream on the El Machito mine, which is in a private vehicle, which has had a good year in 2020.
Okay, and you talked about $15 million coming in this year. What are you forecasting for next year and the year after?
So that was just in Q3. It was US 15.15 million.
Sorry.
Just for Q3.
Right.
So that would just be one quarter. We had a strong Q4, which we announced the production results of already, and we will be announcing the financial results upcoming.
What was the guidance for the year?
The guidance for this year is 27 to 30,000 gold equivalent ounces, and at a margin of approximately 90%. So it's relatively easy math to pick your gold price that you'd want to assume.
Got it.
And then figure out from there.
And when do you usually issue guidance for the following year? How do we get a sense of what you think this growth profile looks like?
Certainly. Well, we've announced guidance for 2021. We're still waiting for our underlying operators to really communicate to the market themselves, as we don't want to, front run our partners on what we think. But it's certainly, we do see a lot of growth. Another asset in the portfolio is a royalty on Gemfield. That one is private as well. It's held by a company called Waterton, which is private equity. That's an asset that's fully shovel ready. And we expect that to potentially go into a public vehicle, which would be a positive for Maverix, and another asset that could potentially come online in the next couple of years.
And what does it look like in terms of resource only or reserves only, and how much do you include exploration in there? I mean, how do you go about breaking down the numbers for the market to actually understand? Because it's very complex. There's a lot of moving parts. Yeah. So and for people to do peer analysis, it's hard.
Yes, no, of course, and especially with over 100 assets, it is. on our website, www.mavericksmetals.com, we do have an asset handbook, which outlines every single asset that we own in terms of whether it's a reserve stage or resource stage. We found that to be a very handy guide for people just looking to get a quick sense of who owns this asset, where in the world it is, and what stage of development's at.
But you know what I mean? Like I know brokers who couldn't be bothered to look at that and do the work. So, yeah. For the average retail family office, I mean, what are the numbers that you think they should be looking at? Certainly with regards to your company.
I think the first and foremost is cash flow. We do have a very strong cash flowing base right now. So that is, very clear. And then I guess I would say that the near-term development assets, some of the ones that we highlight in our presentation, which can also be found on the website, particularly in the Western United States, we have a very strong portfolio of upcoming assets and over the next 1 to 5 years where they could potentially start contributing to the Mavericks portfolio.
Right, and so obviously early days for you with some of these royalties. So there's not a lot of drop off anytime soon, and there's new projects coming on. But do you expect this to be sort of an upward trend in terms of the cash flow? Is that what you're hoping for?
Certainly, and that's what we've seen since we started in 2016. I think we had just under 2,000 GEOs in 2016. In 2017, we had 11,000 gold equivalent ounces GEOs. 2018, around 20, and 2019, in around 23, and 29,000 ounces in 2020. So it has been very much an upward trajectory. We see with just how many royalties we have on development assets right now. It's just the optionality is very deep in the portfolio.
Right. And you talked earlier on about organic growth. Obviously that's cheaper because not much more money needs to be spent. You're not wasting money buying things, expensive things at the moment as well. What's that as a percentage of growth going forward for you?
Yeah, it's hard to put an exact percentage on it. As I mentioned, we don't speak exactly for our counterparties. We wait till they announce their guidance. But in terms of the assets, I mentioned a number of them. But just to recap, it's Gemfield, Delamar. We have royalties on Railroad, Hasbrook, McCoy Cove, Mother Lode, Camino Rojo, which is obviously coming into production, Cerro Blanco, which had some recent news. So it is a kind of across the that next wave of assets that come on. So it's hard to pinpoint exactly what exact date and which one will come first. Just that having that exposure across kind of a suite of assets provides that diversification.
And how do you keep yourselves in check? Because again, we look at some of the royalty company statements out there, and they're claiming revenues on assets which haven't even got a resource yet in the next 2 years. And you're like, well, that's aggressive, to put it mildly. Yes. So how do you keep yourselves in check? What are the series of probabilities that you need to sort of see or need to have in place before you'll make statements to the market?
Yeah, no, I think that's a great question. Part of this comes from how we were created out of Pan American Silver. And as I mentioned, we've got a representative from Pan American Silver on our board, from Newmont, chair director with Kinross. These are kind of large conservative companies in terms of what they throw out in terms of their guidance. So that's been a good fit on a corporate governance side, particularly with Jeff being the CEO of Pan American for 12 years. I think the internal controls at management, as well as the kind of that very strong board is, I think we lean. If you look at the performance that Mavericks has had relative to our guidance each year, we've done quite strongly relative to what we've put out to the market. And I think that looking back as to what we said before, as to what we did, I think that's a very good thing for investors to look at in terms of the track record that we have.
And what are those things? What are those value sensitive organic catalysts, that's a lot of words, that you look for? At what point do you get comfort? Because is it at PEA stage, feasibility stage? Are there specific operator guidances that you need to see before you make a step? And I appreciate all of this. Your portfolio is so big, you can't get specific on any one thing. So I'm just looking for a broad attitude to how you treat the numbers.
Yeah, a broad attitude I would say would be conservative. From a cash flow perspective, we do have 13 paying assets. None of the individual assets make up more than 15% of revenue. So it is highly diversified. So in terms of, if we're conservative on individual assets, the entire portfolio, there tends to be either positive surprises, at least somewhere in there. At least that's what we've experienced historically, and that's led to pretty attractive production results relative to our initial guidance. But I would say conservative would be the
okay. So that's the word. Okay, that's the takeaway. So, and again, just sticking on the organic base just for a little bit longer. So, organic versus transactional, what would it be as a percentage going forward?
Well, it's always one, we have a significant amount of existing organic already, so that is, we don't have to pay anything more for that. That's already in the portfolio. We own it, and it's a simple upside to us at no additional cost. In terms of transactions, we're very disciplined in terms of looking at new acquisitions. Our most recent acquisition was a second portfolio from Newmont in Q4. So that was a $75 million transaction, adding more than 10 development gold royalties into the portfolio. That's one where we had a unique relationship with Newmont, who was already a 20% shareholder. They increased their stake to 30%. So that was, we very much appreciate their support and endorsement of the Maverick strategy. So that was a bit of a unique one. When we look at competing in auctions, so to speak, of royalties, we're seeing a couple things. We are seeing the returns on some of the larger transactions begin to decrease a little bit. And certainly it's not a Maverick strategy to try and compete with Franco-Nevada or Wheaton Precious on multi-$100 transactions at very competitive situations. We have been very active in the under US $100 million range. That's something where it moves the needle for Mavericks, but doesn't necessarily be the main focus of some of the larger players. And that's where we're seeing some nicer returns, and that's where our focus is.
And are you happy with the sort of cash on cash returns of the current portfolio, or do you think you're waiting for future growth?
No, actually, there's actually a page in our presentation that speaks about the cash on cash returns we've experienced to date. We have had very positive return on investments, both through the increase in gold price since we acquired a number of the royalties, as well as expanded production, expanded resource base, expanded investments into those assets. So we've seen very strong returns in the investments we've made to date.
Is that sustainable?
We hope so. We believe so. That's the plan.
Okay, and so how are you trading versus your cash flow? Again, we've had conversations this week, and people, well, you know what they would say.
Yeah, well, I think we talked about this earlier a little bit in terms of I think there's a bit of a disconnect between some of the gold equities with strong cash flow and the actual gold price itself. So you could consider us in a similar I guess camp as most of the other CEOs you've talked to. That's for sure. We have had just in terms of recent Mavericks news, we did have a large focus on one of our royalties, which is on the Hope Bay project in northern Canada. It was going through a very interesting M&A situation, which ultimately resulted in Agnico Eagle just recently acquiring that royalty. And that was, I would say, a big focus of some investors as to what that outcome was ultimately going to be. It's a very positive outcome for Mavericks with Agnico stepping in. We believe there'll be a significant investment by Agnico, very experienced operators in that part of the world. So that, I think, is with the clarity of that, I think that was going to be a major catalyst that hasn't necessarily been reflected yet. Another piece of news, which actually just got announced Friday, very exciting for us, is the GDXJ index has included Mavericks for the rebalance. And that actually should be in the next week or so, where they actually do the formal rebalancing. And I think that would be another big catalyst is being involved. That would be the first kind of major index that Mavericks would be involved in. So we do have a recent catalyst and an upcoming catalyst that I think will be very exciting for investors. So in terms of where we're trading, we look historically at other companies that have been added to the GDXJ, and they've performed very strong on the back of that acquisition of shares by the index. So that is something that we're pretty excited about coming up pretty soon here.
And what else have you got to do?
We look at increased cash flow. We put a dividend in place just over a year ago of US 1 penny per share per quarter. Since that time, our balance sheet has improved with cash flow, with higher metal prices. And it's something that we'd absolutely talk to our board about in terms of whether or not that's something that we could potentially increase. We have looked at other companies seeing increases. Newmont, one of our larger shareholders, obviously had a recent dividend increase. So that's something I think that we would focus on as well. And then it's just growth in the portfolio, whether it's through the organic growth, which we already have, and Camino Rojo coming on later this year, as well as potential acquisitions, which we're always on the hunt for.
Right, but what do you think is going to move the dial most? You know, a penny dividend per quarter is nice. Dividend paying is nice, better than not. But what are the big things that you've got to do? Because it seems to be you put out good news all the time, and it's just kind of going flat. Where you kind of reach the size, and it gets harder to grow. It gets harder to tell a growth story, and it's even harder for people to believe it because they're looking at all of these wannabes beneath you, 50 to 100 million bucks. You've got better leverage, and that's where the eyes seem to be going. Do you have to get more institutions on board? Is GDXJ the first step for you?
The GDXJ is a big step. We saw it when we listed on the New York Stock Exchange. We saw a big pick, which we did just over a year and a half ago. We saw a significant increase in our liquidity, and our liquidity is still not exactly where we want it to be. And I think that's what the GDXJ could potentially unlock. Just raising the capital markets profile of Maverix. It is forced buying, so there will be buying from the GDXJ to rebalance, as well as that liquidity. And I think that will be as I mentioned, a big step for the company and potential to unlock some pretty significant kind of equity price returns.
Right. And do you feel you need to go a little bit more global with the message too? Because, again, we look at you, you're not quite there yet in terms of being one of the big four guys.
Yeah.
But you've got the potential to be. Your precious metal focus, which seems to tick a lot of boxes too. Mm-hmm. But do you feel you're reaching all the right people that you need to? Because
it's a tough question right now because of obviously the travel restrictions globally. It's kind of changed the dynamic with respect to kind of COVID protocols in place. It is something that we absolutely want to focus on as a company growing. So it is a little different doing the conferences over Zoom, so to speak. But hopefully, there's a global change on that, for everyone's sake, coming up. But yes, the question is we do need to continue to grow the registry. We did see last year Pan American Silver had warrants that they received in 2016 that were about to expire this year. They exercised those warrants and then placed that block of shares to a number of institutions while actually, putting money into the company as well. We saw with those institutions that came onto the registry some very big names. That was a big strength for us and did increase the liquidity. So those are steps that I think are natural and will come as we continue to kind of build and mature. But it has been significant growth so far. If we look at our liquidity now versus where it was 18 months ago, dramatically changed. And I think there's another step forward with the index inclusion on the GDXJ coming up.
Do you think that you've got the right model? We look at some royalty companies and streaming companies have tried to do is just change things up a bit and perhaps add a little bit different types of revenue streams to the story.
Yeah, so we have a very simple model, I'll call it, in terms of how we want to build the portfolio, how we want to explain it. As I mentioned, we're 99% precious metals, gold and silver. We are always going to be a heavy precious metals. We're not going to go too far afield in terms of different metals. That is our focus. With the amount of development that we have in the portfolio already in terms of existing royalties on near-term, mid-term, and later stage development projects, we're looking more to add cash flowing assets. So we're looking at things that are either producing or with a clear path to production. Many reasons for that, increasing the cash flow engine. It is a different risk profile as well. You have to how well defined both the cash and the timeline is. And then from a geography perspective as well is, the predominance of our royalty revenue comes from Canada, the United States, Australia, and Mexico. So it is, I would call it a straightforward portfolio. In terms of buybacks or caps, we don't have any caps on any of our royalties. We don't have any buybacks anymore. We actually had one partial buyback, which was on the Hope Bay royalty, which Agnico exercised when they acquired it. But with that, which brought proceeds of $50 million to Maverix to our bank account for a $40 million investment, plus the cash flow we had received to date. But we do have a very clean portfolio in terms of no buybacks, no caps. We don't have any, I'll call it offshore tax structures. We do have a Canadian, Australian, and U.S. subsidiary that do have purchase price allocations to manage that tax, but we don't have any offshore entities. It is I will call it a very straightforward existing portfolio. That message has generally been well received. It's easy to explain, it's easy to understand, and I think we're going to continue to focus on that. And this is a function of size as well. Is where we are at as a precious metal royalty company at, as I mentioned, $700 million market cap now. There are still opportunities to grow without having to get too creative. We don't have any interest in picking up direct mining assets, whether it's a mine itself or a joint venture. We will stick purely with the royalty and streaming model. But we have seen, at certain sizes, companies getting more creative to build a portfolio, and then they've done a different strategy than what we're doing. We do get asked, well, ultimately, if you get big enough, are you going to have to face those same questions and go into that same direction? And our kind of comment to that as well, that's at least a triple away from now. So we'll cross that bridge when we get there, and that'd be a good problem to have. But certainly with where we're at right now, we are starting to we do see opportunities to kind of grow in a more simple strategy.
Okay, so that's focus. I get it. Oh, just one more question, and it's really about how you guys think and operate. When I spoke to Ryan last year, you were in the middle of doing a transaction with Karora, as is now RNC Minerals, I think was the company, and that seemed to go on forever. Those discussions went on forever, and you got something over the line. Were you happy with the deal?
Absolutely. It's just one where so what we did with Karora was it was a 7.5% royalty on the gold. We lowered that to 4.75%. That was $18 million that came into Maverix for that transaction. This is one where we do see ourselves as operating partners with Karora. 7.5% is a very high royalty on the primary product. Lowering that to 4.75, it seems to be a win-win, where they were able to essentially get after exploration significantly more, and they've done a tremendous job there. But being able to allow them to kind of unlock that exploration potential by doing a win-win transaction, I think it worked out for both sides.
Eventually.
Yeah. Well, they're doing very well. Yeah.
Okay. Right. Brilliant. Dan, appreciate your time today. Fantastic run through. I like the simple messaging here. It's very clear what you're trying to do. Wish you well. Stay in touch. Let us know how you get on. Sounds like there's a lot of stuff coming through.
It's exciting. I appreciate you having Maverix on. Thank you.